Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. And I'm going to be talking everything for indices, commodities, gold, silver, oil, and currencies in this video, talking about trade setups. It is an action-packed last couple weeks and weeks ahead. Things are really heating up in the financial markets, and I wanted to just give you guys as well an updated view of my personal P&L so far on this trading account, the public trading account that I share regularly on my YouTube channel. So far, I'm up $55,000 this year. This is a really good start for me. I haven't really had any major drawdowns so far this year, though it is expected to happen, of course, but I've been on a nice little winning streak overall. We're up about 6% on this trading account so far this year. This account has about a moderate level of risk. I'm not looking to take tremendous risk, but 6% to me so far is really quite good, and I'm proud of it, and we're gonna see if we can keep up the winning streak. Also, the reason I do this, the reason I show you this is not just to brag about this amount of money. I am excited that I've made this amount of money. Don't get me wrong, that's good money. But more important, I just think that, I sell something on the internet. I do this stuff, but I really want to show my audience, you're not wasting your time watching my videos, what I talk about, what I share about. I'm passionate about this topic, but I also make money in it, and I show you my live brokerage statements so that you have no questions and so that you actually can take what I'm saying with some authority. And again, I'm proud to be able to say I am a profitable trader, but more importantly, I don't want to waste my audience's time. I have a platform here. I'm very thankful for you guys as an audience, and that's why I show you my P&L. Let's go ahead and jump in. All right, and where we're going to start here today is going to be gold, because I actually picked up a position on gold going into, well, actually after the Friday morning news. So on Friday, we had jobs numbers that came out a little bit lighter than expected. Let me show you. So I just pulled up the NFP chart on the Edge Finder. Check this out. So this is, for the first time in a minute, we actually had jobs data that came in lighter than forecasts. And, there's so much to talk about with this jobs number. Is this the start to what the Fed wanted to see? The Fed has been mentioning day in, day out, we need to see the economy cool down a little bit. And you can see the red dots, by the way, guys. These are the forecasted values. You can see they were expecting continued kind of uptrend in that jobs data. Well, we got a miss, and we missed on several fronts. But of course, the big jobs number that was expected, last month we saw slight revisions higher. You can see with the yellow line, this NFP chart, we took a lot of time to make sure you can see all the necessary data points from this. So again, jobs data came in light. That's the first thing that I wanted to talk about. The other thing we need to talk about is wage growth also came in light. Check this out. We've got an annualized 3.9%. This is good stuff, guys, for the inflation story. Remember, for the Fed to cut rates, they need to see inflation coming down. And in order for inflation to come down, one of the big things that will help that story will be some cool down in the labor market. So here's the latest inflation data out of the US. You can see, we are still kind of stubbornly staying up in this mid to low threes. And it seems to be really hard. The last kind of push down to 2%, which is what the Fed really wants to see in order to cut rates, has been tricky. Well, this jobs data gave the market some excitement, and the stock market took off running, which was great for some positions of mine that I'll show you later in this video. But also, this cool down in jobs was also accompanied with another little data point that came out shortly after. The ISM Services PMI came in lighter than expected. Again, if you have the Edge Finder, pull up your PMI charts, keep this one on your radar. Everybody looks over PMIs, but consumer confidence and PMI data, super powerful stuff, and it's why I've got it right directly in the Edge Finder for you guys if you do have a copy. So check this out. Services PMI came in light. We also had manufacturing data come in this week, light, and we're painting a picture here, guys. What is PMI? Quick refresher for the new guys and girls. PMI data is a survey essentially sent to purchasing managers. They ask these purchasing managers, hey, questions like, are you planning on hiring a lot? Are you looking to buy a lot of durable goods? Are you looking to do this, that, and the other? How much business activity are these important decision-making people in companies looking to do? And if that number comes in light, that means that sentiment around the economy is perhaps looking a little bleak. And this is also more of a forward-looking indicator. It's one that I absolutely love. And that's why. It's because it is somewhat forward-looking to survey people or consumers or hiring managers, etc. So very important stuff. And that paints a picture, friends, for why I went long gold. So gold, I just highlighted all of that. We just discussed that verbally. But in this modern day, you got to have software that does that for you. And that's exactly what the Edge Finder did this week. I'm, very excited as we do this video today because I'm just proud of the progress that we've made on the Edge Finder. Everything that I just illustrated was automated by the Edge Finder. You can see employment data came in and it was a little bit lower than expected, some slowdown in jobs. Hey, that's not bad for gold. That means that, again, rates might get cut and perhaps even worse, maybe the lagged effects of the Fed might cause some concern. Again, why I'm so excited about this is look at this. These misses in PMI data gave bullish reads to gold. Slowdown in the economy could be suggesting that maybe a bigger slowdown is coming. And if that's the case, I want to be long gold. So again, really excited about this. And we got that +7. Gold shot up into the highest, very close to the highest rating on the Edge Finder currently on the top setups window. And I saw this level. Now, again, all that to say, think about what we just did. Like 95% of what I just talked about on gold is fundamental. The final one is something so simple. It came down to a level of support that I liked, rejected off of it, so I bought it. That's how simple the technicals, in my view, should be for traders. No fanciness, no, getting cute with our charts or anything like that. Let's just keep it really simple. We hit a support level. Buyers seem to be strong here. And final point, if I'm wrong, if I'm dead wrong on my timing here on gold, guess what? I stop out, I take a loss, and I say, oops, let me try again somewhere else and be a little bit more constructive. So again, that's my layout here this week for gold. I am already long. Let me show you my position on GLD. This is the ETF that I trade gold on. And you can see it is, GLD tracks the price of gold. So it's just an ETF, which I can trade a little easier on my broker WeBull. So it hasn't really moved much from my entry, just near kind of break even or pretty close to it, but looking for some continuation to the upside. And if it happens, I'll be looking to trail stops. If it doesn't, I'll take a controlled loss and I'll look for a possible re-entry. But there it is, guys. I'm bullish gold again after this week's data. Again, I like the story of potentially we will get rate cuts at some point, but in the meantime, whether that's a wobbly way to rate cuts, meaning the economy really slows, or not, I think both those scenarios where you start to see a rate cut in the picture, gold likes that. And so I am watching for that possibility for gold to appreciate. Yes, I'm trading it, up in the 2300s. That seems high, but remember, gold, when it really gets moving, can move much, much higher than people ever expect. So I am long gold. I know that was a long, drawn-out explanation, but that is a current position of mine. Also, I spent a bunch of time showing you some really cool features of the Edge Finder. I'm ecstatic about where the software is going. I just want you to know, when I show you guys my P&L, my trading results, the Edge Finder has been massive in helping me to grow my trading account. The Edge Finder isn't a holy grail, but it is a wonderful tool for using all of the resources that we discuss in these videos and automating that component so that you don't miss opportunities in the market because you're not seeing the data as it's coming in. You need to have a good feed. The Edge Finder, let that be your tool. I'm so thrilled to see how far it's come. Our team has expanded. Our progress in this tool has been incredible, and I'm so excited to see where it goes. So if you don't have a copy, let me just remind you, you could pick up a copy using the link down below in the description. YTVIP, that's your ticket, guys. Use that code. It will get you a nice discount on the tool. There's also down below in the description a way for you to try it for 30 days. That is a paid trial. It costs $199 to try it for 30 days. If that's something you're interested in doing, you can send us a direct message on our website and we'll get back to you about that. Or you can pick up a copy for a discounted subscriber rate using that code YTVIP. Now, the next thing we need to discuss before we get into more charts is I want to take a look with you guys at the Commitment of Traders data that came out this week. Let's take a look at sentiment, COT data, and let's go through it. So overall, still gold, oil, the Nikkei, silver, these things institutional wise are percentage based, very long. We have, 79%, 76%, 75% long on these things. And then on the short side, we have the yen, the Swiss franc, the Australian dollar, the Canadian dollar, and the bond market. So, or 10-year specifically bonds. These things are more shorted by institutional traders. That's on a longer term basis. Let's take a look at the traders kind of focus, which is the week to week change. What do they buy? What do they sell? Well, let's go through the buys really quick. We had NZD, CHF, and by the way, these are sorted by biggest change. So on a week to week basis, net percentage change, you can find out the calculation to that on our website. If you go to a1trading.com/edgefinder-tour, you can get the full rundown on how this calculation works. Anyways, CHF, CAD, AUD, the euro, gold got a slight bid, the yen, the dollar, and Bitcoin's about flat. On the sell side, let's take a look. We had platinum, the South African rand, and again, these are ascending now in terms of biggest sells. ZAR, copper, oil, Russell, NAS, SPX. I mean, they sold the indices. Very interesting. Pound, silver, the Dow, and the 10-year note, as well as the Nikkei. Okay, so there's your COT week over week. Some interesting stuff there. I'm happy to see gold is still getting a bid here. And again, look at that long percentage. They're still very long overall on the commitment of traders data for gold. The next chart I want to run through with you guys is the dollar index. Check this out. Really interesting day on Friday. So you had jobs data miss, which caused the dollar to really slip hard. Expectations for rate cuts are now looking like 1 to 2, seems like the consensus this year, like 1 to 2 rate cuts by the end of the year. When I say rate cuts, I'm referring specifically to, the 25 basis rate cuts idea, which is like 0.25%. Right now it's at 5.25%. So, if you see jobs lightening up, there's a probability increase that, hey, the Fed might look to actually start cutting interest rates. But then the market rallied back towards the end of the day. And, when we talk about this, it's not isolated to the dollar index. You can also see that it happened in the 2-year note. Or the two-year note yield, right? So yields dropped hard in the morning off that data with PMI data following. I mean, it really dropped, and then it rallied back throughout the rest of the day. Now, still a big down day, right? We can't just, kind of look past the fact that we had a big dip here recently from the yields on the 10-year, the 20-year, and the 2-year. But the dollar index, again, did come back to a level of support. And when I say this, I'm still kind of pointing to something that Jerome Powell said in his press conference this week, which you can go back, I'm paraphrasing here heavily, but he essentially said that he thinks that the other central banks, our Western allies like, Canada and the UK and Europe, are expected, he thinks, to cut rates sooner than the US. Now, that's not a incredibly shocking statement. That's kind of been the consensus recently. It's why, when you look at the dollar, it's been in a secular uptrend here this year is, hey, the US outperformance seems to just be so dominant. They're probably not going to cut rates as soon as the other ones. Well, if that's the case, I'm still holding out on the idea that, we've hit a support level. It's going to look like, the economies of, Europe and the UK so far this year, they seem to be slowing at a faster pace than the US, so they may cut first. That makes the dollar still look relatively attractive, and I would not be surprised if we do start to recover this move that we saw in the last couple of days with, that less than expected hawkish Jerome Powell press conference, the jobs data, PMIs. Yes, that's some evidence to suggest the dollar may look a little weak. But still, relative to its peers, I think the US dollar still looks attractive. Now, let's see if the Edge Finder agrees with me. I think right now we're getting a lot of neutral readings, so I'm not actually going to be taking a whole bunch of sell setups against the dollar. In fact, actually, look at this. The euro getting us a bullish reading. Wow, how did I not talk about this already? That's shocking. Let's take a quick look at the euro dollar. But first, what's getting such a strong reading? Well, retail seems to be short on the euro, so that's getting a bullish read on that. Seasonally, it's a good time to buy the euro against the dollar. Trend slightly up. GDP numbers favoring the US, I'm sorry, favoring in Europe, which is interesting because the US did have a big miss in GDP numbers recently. PMI numbers favor Europe. Services PMI, we got a flat read there. Retail sales do favor the US. Inflation still favors the US in terms of a sticky inflation situation. And then jobs data actually favoring Europe because of the US's miss in jobs this week. So the euro is actually getting a bullish read. Let's go take a look at this. And again, that would make sense. Look at this. So very interesting. This level of resistance. And I actually was short the euro. So full transparency, I took a couple losses this past week. I took two notable losses. I took a short on the Russell that did not work out. I had a couple trades that did work out on the Russell. I made some money on the short side, and then I kept shorting, and then I had a loss on Friday. So I also took a loss on Friday on the euro. I shorted this area. With the pop, I did get stopped out. So, let me also, I had a bunch of people who were trolling me about that on my live stream, pointing out like, Nick, you dummy, you got short, you got stuck with a bad trade on the Russell and the euro, and you're all over the place. Let me just remind you that the best traders in the world, their equity curve is not a straight line, right? The best traders in the world, and I don't claim to be the best, but I know what I'm doing overall in this. I make more money than I lose. That's all you can ask for in the financial markets, to be honest. They still have these periods. Every single trader on planet Earth, the best in the world, still have these sorts of periods. Nobody's perfect in the markets. That is absolutely something that you need to take with you. Doesn't matter who you're listening to. And also, if you listen to an influencer or somebody else in the social media, I just want to remind you that if they don't show you any broker statements, if they don't discuss their losses in detail, I'm telling you, they take them. They just may not be showing you. And you don't even know, if they don't show you broker statements, you don't know if they're even profitable. People can window dress so hard in this industry. So please be very careful out there. People can make it look like they make, tons of money, and they can sound so smart, sound so fancy with it. But until they show you broker statements, you don't know if they make money or not. Just remind that. That's like something everybody should take with them, because if you're new to this industry, just trust me, there's some people who you would think they sound so smart, they're so brilliant, but they don't show you track records, and there's a reason that they don't, okay? Anyways, the euro idea, actually looking, I don't love the chart, to be honest, but if you start to see something here where the euro is breaking through this level of resistance and closes strong, and perhaps the euro is due for a bit of a bounce just off of the recent, hey, maybe the Fed is going to cut rates a little bit sooner than people thought. So maybe there's a little bit of a short-term relief rally, but I still longer-term favor the US over Europe in terms of which currency. That's been a trend that, for the last few years, I've been predominantly short biased in the euro, and it's treated me well. I've had some losses and things like that, of course, too. But overall, the story here, in my view, is the US outperformance will continue to be a thing. That's my opinion. That's my take on the data that we see. And so we'll see if that plays out. Anyways, let's keep pushing on, see what else we can look out. So I want to recover some dignity here on the Russell. What happened to me with the Russell? Let's take a look. So the Russell was a position that I took, and I want to show you just what I say. I say this often on my channel. The hardest trade in the book is to short US indices. That's something that I've found to be one of the most difficult things to do. It's why I don't do it very frequently, and why most of the time when it comes to gold and indices, I like these things holding them long in general. Now, it doesn't mean they always go up, because there's certain periods of time where the Russell looks absolutely horrendous, or gold looks terrible. So there are moments to be bearish on them, but just very, very carefully select those times. Well, I shorted the Russell right around this area here. I really liked the setup, but then on Friday, it popped against me. Now, actually what happens, I shorted a little bit sooner than that. I shorted and caught some moves here. I shorted over here, and I actually made money 2 different times. I trailed my stop into profit and took, admittedly, small wins. So let me just start fresh. So I shorted over here. When it dropped, I trailed my stop loss, and then it popped back against me, and I still made some money, although it be a little bit of money. It wasn't a lot of money, but I made some money. Then I shorted again over in this area. Market dropped beautifully. I was feeling great about it. Then trailed my stop, popped against me. Okay, ready for the final one? I shorted. And guys, when I say that this was just the most beautiful start to a trade I've seen in a long time, I shorted like the high of this daily candle. You guys remember the Fed meeting? The market ripped higher, and during the speech, the market got really, really excited. I shorted like the Russell near the perfect top of the day. And within a few minutes, guys, I was up like $1,200. It was awesome. I was like, wow, that's the fastest $1,200 I think I've ever made in my life. And then I watched it all go away because on this one, I didn't get a chance to trail stops. It didn't break structure, which is what I'm looking for to trail stops. Never did that, and in fact ripped through the highs on Friday and took me out for a full loss. So let me tell you the frustrating reality of this whole situation. I haven't checked the exact numbers, but between this trade, I think I took about a break-even result. Even though I took 2 winners, they were small winners because I wasn't able to really, let a winner, nothing really followed through for me. So let me ask a rhetorical question myself for a second. Did I win out? Was I right about my Russell bearishness? The answer is, I think no, because when I'm right about something, it's no question that I'm right about something. If some of you have been watching me for a minute, you might remember some of my trades that were rock star trades. And the most recent one was when I went long gold over here and I held that baby all the way to the top. And then I stopped out right over here. I trailed my stop like massively into profit. There's no question I was right about that move. But this Russell trade, I think in the end, I never had anything break lower. We didn't see any lower lows. So even though I might have caught little good entry points, these little first base runs, for me, I know some traders love those things. They love to just, short it and then take a profit, short it and then take a profit. I don't trade that way. I like to really go for big runners. And that in its essence is why I find it very hard to short the US indices with my trading style. Now, other traders might have more success with it, but for me, I don't do first base hits. I look for, big winners. And what that usually means is, I don't catch that many great trades. It's kind of infrequent, but when they happen, and it's awesome. That being said, that's the update. I'm no longer looking to short the Russell unless we start to see, I need to see some more impressive confirmation. This level was my line in the sand. This spot here, when it broke on Friday on the excitement that, jobs cooling might mean rate cuts are coming, that just nullified my idea. My theory here with the Russell rolling over, there's just too much positivity coming into the market, and I just don't like to be short in that sort of environment, and I took the loss. So again, there's a recap, a run through of my trading loss there. I just also want to mention that I shared several updates in our free Telegram channel. If you're not already in our Telegram channel or our Discord channel, in the description of this video, there will be a link to those. I highly encourage you join those things. They are free to join. If you're just somebody out there and you don't want to pay for a group, or you don't want to, purchase the Edge Finder, you can't do that. You just, want some free value. I genuinely appreciate your audience. I just ask 2 things. Number 1, hit the thumbs up button on the stream, the video, wherever you're watching. And then second, join us in Telegram and Discord. There's some great value in there that Frank and I are putting out 100% free. Okay, let's keep pushing on. The next one that I want to talk a little bit about with you guys is that S&P. Let's talk about it. So I have kind of a foot in and a foot out when it comes to my positioning here. So I have several positions that are very green now because I actually bought this dip. If you're someone in our Discord group, the inside of the paid room, I shared several trades that I was taking on the options side of things that are looking really, really green. And I'll discuss those in just a little bit. But first, let me give you my run through on the S&P. Now, I cleared my charts so that I could do this with you guys. It does look like, and I am saying this a little bit painfully because I was hoping we would get a little bit more of a discount in the financial markets. I'm looking for the indices to roll over bigger so that I can build some positions. I'm actually looking to build out a portion of my portfolio in several stocks that I like. But I want to buy these growth stocks when the market's actually given us a good proper dip. And while I did have several trades that I was able to get in, I was hoping that we'd see a bigger dip. That all to say, you could probably hear it in my voice, this looks really bullish, and I can't make up any sort of, oh, this looks bearish, these levels, look like they're going to hold. Let me show you why. So we came down and we nailed this level of support. And my question after this day was, are we going to just pop here briefly and then break through support? And the answer was given to us shortly after, no. But let me ask you guys, to think through this with me. Why did we get this pullback? And are these concerns still valid? And the reason I'm going to tell you they are not valid is because, well, let's go through them. Okay, so I'm going to make some room here before we get into the technical charts. Okay, oil and we're going to put ME for Middle East. We'll put MEC, Middle Eastern crisis, right? The stuff that's going on in the Middle East is still happening, still real, but the news cycle, the news headlines have really slowed on this. Now, whether that be, just news cycle stuff moving past it, I don't know, but it seems like for now, I'm just speaking as an uneducated, I don't know what's going on in the Middle East in depth. That's not my area of expertise, but it seems like the concerns there have deteriorated from when they were on the headlines every single morning. So the Middle Eastern crisis, which did contribute to the stock market sell-off here, the concern there was oil prices are going to spike and we're going to see inflation go to the moon, and that was scary to the markets. Now, on top of that, we had higher for longer, right? With yields, let me show you this. Yields, the 10-year yield was just creeping up and up and up. As this thing approached 5%, I couldn't tell you how many times I heard people say, that 5% level all over CNBC and Bloomberg and all the, news articles, that 5%, watch out for that. It's going to be a huge competitor to stocks. And it is, right? If you get bonds as an alternative investment for people who are looking at the stock market, if it's at 5%, I mean, who's to blame? Retirees, people who are, putting their money in pensions funds. Why wouldn't you take a risk-free 5% that has tax benefits? I mean, come on. That's a great alternative if you have a bunch of money and you're an old person looking to just retire. So that dries up demand for stocks pretty heavily. And so, as that started to get higher, you have to be aware of those things. That's why we talk about yields very often. They're very important. Yields also tell you what the bond market thinks about where interest rates are going. Higher for longer is not good for stocks, right? Higher for longer means, again, the alternative to stocks goes to bonds, but also it cuts into business profits when borrowing costs are made higher because of the central bank in the US, the Fed, making that Fed funds rate higher. When they raise interest rates, it makes businesses, it makes it harder for everyone to borrow money. And harder borrowing costs is not great for especially growth stocks like technology companies that require a lot of borrowing in order to advance their technologies and build the future, right? So, okay, those two fears are some of the big ones. Another one that we could point out is China, right? China's economy has been terrible. Well, I don't know if you guys caught this one, but check this out. Here's FXI. I did have a profitable position. I'm no longer in FXI, but it seems like, FXI is 30% off of its lows. We might be seeing the turnaround story starting to happen for China. This is great for all markets, right? China's a huge demand. They're a huge part of the world economy. Whether we're friends or foes, they're huge, we're huge. US and China are, of course, the big boys in the picture. So China's starting to come back. Overall, let's go through this together. We had jobs data that discouraged this, that said, hey, you know what, we're probably okay here. The oil situation, oil's been selling off. I don't know if you guys have seen oil. Look at this. Oil's coming down hard. Boom. The oil trade is off. I made some money on the way up. I'm no longer in the oil trade. I got stopped out, and I'm so glad I did. I took a stop right there, guys. And, I made money on the way up on this one, and then I took a loss on this trade here, but I took, what was a controlled loss, and look at where oil is now. This is why, again, stop losses are very powerful stuff. So this side, remember, oil going up too is inflationary. It means everything else, the price of everything else can go up when oil goes up. It causes inflation. So that story looks good, and China looks good. Suddenly, what I think we might have seen, guys, is we might have seen a really short stock market pullback. And again, it meets the criteria of unusual normal pullback. 5% I would say is a very normal and healthy pullback. That being said, let's get back to the technicals. And by the way, this is a long video. I'm doing a long one for you guys. If you're enjoying this, do me a big favor. Hit the thumbs up button on the video. And if you're 30 minutes in, can you guys just, put the word 30-minute in the comment section? Just type 30 minutes in. I appreciate you so much for watching my videos. I know I say that, and it might sound superficial, but genuinely, I'm here. I love this topic, and I know a lot of you guys do too. And I think it's so cool that we get to share this through the internet and just talk markets, talk charts. So if you're 30 minutes in, just type 30 minutes in. I'll try and like your comment. And again, thank you for watching my content. Okay, so technicals. S&P, I talked about this level a couple times. I was doubtful, but I did talk about, this was potential higher low stuff. Well, it looks like it might have been, because then we got another higher low right here. And what we're starting to see, guys, is not only did we get a couple higher lows here on that, we could probably bring that down in the 4-hour chart, but I'm going to keep it on the daily for a moment. Look at that. On Friday, that recent, big sell-off point, look at the confidence at which this market pushed through those levels. So again, April, big down month for the stock market, big pullback after the 5-month streak. That was very appropriate. It was time for a little bit of a pullback. And with this close on Friday, this looks really strong. So in my opinion, I am looking to stay bullish. Now, I mentioned earlier that I have positions. Where do I think we go from this? Well, we might have some bumps in the road along the way, but I do think that we may work our way back up, and that this is probably not the high of 2024. I know some people have been saying, that's the high, that's going to be the high. My opinion, at least for now, is that that is not going to be the high of 2024. Now, I still think that you might get rocky roads. There's still, plenty of things to also still be concerned about. There always is when it comes to the stock market. But I think it's an election year. The Fed wants to cut rates. They're going to find a way to at some point if that inflation story continues to if it makes some progress. That jobs data was a good start. I'm very cautiously bullish for the rest of the year. So let me also show you a seasonal chart. So I've just pulled up the Edge Finder's month of the year trend. Seasonality, I don't know why. The audience doesn't usually love seasonality, but I love this topic. And if you're also a seasonality, nerd like me, if you like seasonality, I don't know, say something about it in the comment section. But I love doing this. And if you want me to do it more often in the video, just let me know. So the month of May on the last 10 years has seen a positive expectancy of around, 0.98% according to our data here. So this is looking at the last 10 years of historical data on the S&P and saying, okay, it's up about 1% in the month of May. Last month down 4%. Tough month for the S&P, pullbacked hard. That was kind of stunted the win streak for the year. Perhaps that bounce back is coming. It's already started, it seems like. We'll see if that continues to run, but we're entering into a period where personally, I want to be long. I want to be long the S&P. I want to be long NASDAQ, and I already am, but I'm looking to build bigger positions. In terms of momentum trades, I do not have any, but in terms of options trades, here we go, guys. Check this out. I've got a couple good trades going. Okay, so I've switched platforms. I'm looking at my WeBull desktop, platform here. Real quick, as I do this, if you do not have WeBull and you'd like to trade options the way I do, there's a link down below in the description. If you're not interested in options, but you're looking to trade CFDs like gold or NASDAQ, or maybe you're interested in getting a welcome bonus when you sign up for a new brokerage, and maybe you just want to support good old Trader Nick on his YouTube channel, there's some great ways you can do that totally free by signing up with one of the brokers linked down below in the description. I'm asking you to check this out because this is free money for you. Down below in the description, there's a couple different brokerages that have special sign up perks for my audience. These are regulated brokerages that are partnered up with the channel. I've got special deals for you guys if you're looking to trade WeBull or Eightcap or OANDA or Vantage. All of those brokers down below in the description have special sign up perks. And again, that is free game, free money for you. So check it out. All right. So I want to talk about some of my trades that I have on the options side. The first one, well, you know what? Let's just look at the full positions here. So I've got, also, I mentioned I'm building out a stock portfolio very slowly as a portion of this trading account. I bought 2 stocks. One, oh my gosh, it was the worst timing I've had in a minute. I bought Starbucks and now I'm immediately down $600. But on Friday, I bought some PayPal. And I'm sharing all of these updates inside of our Discord room. By the way, every single trade that I take, momentum trade, options trade, stock holding, I share everything that I'm doing inside of our Discord channel. If you're not already in the Discord, again, the link to sign up for VIP is in the description down below. All right, so let's take the stocks out for a second. Let's just talk. Well, you can see my gold position. I also have a Bitcoin short. I didn't mention that. Let's take a look at some of the options trades. So SMH, this is the first one. This one's going really well. Let's sort this by open P&L. We'll come back to SMH. Let's talk about the VOO position. So this was my buying the dip that I mentioned earlier. I bought VOO by selling a put. Now let me add some context to this. I sold puts on VOO, which means, again, as the market was dropping, I believed it started to become a little bit overextended. And so I sold puts. And with those puts that I sold, I ended up getting assigned. Now, when you get assigned, what that just means is you sold the puts to someone, the put buyer exercised their right, and that means I had to buy the shares. So I bought 400 shares with the puts that I sold, 400 shares at an average price of $458. Now, I sold those puts at $460, but because I collected premium, I got them for even cheaper. So I bought this dip by selling a put. I know that's a little bit confusing, but I'll try and make it as simple as I can if you're not an options trader. 460 is right here. So when we started to drop off, I sold puts. And I said, if it comes down to 460, I will buy VOO, which is, again, an ETF that tracks the S&P 500. So I sold those puts. The market fell, and I got assigned. Now I'm in those positions. And what did I do? I turned around, and I actually sold calls. Now, if you don't know what selling a call is, someone else out there wants to buy calls. They think the market's going to rip higher. And if that market rips higher, they're going to make a lot of money. Well, I said, okay, I have 400 shares of VOO. I will basically sell you that call option. So what that means is I sold the call to someone else out there on the market, on the options market somewhere. Somebody paid me premium. They paid me 400 bucks or something similar to it. I'll show you my positions. Go to the call that I sold. Here's the call. I sold it for 70 cents per share on 400 shares. So let's pull up a calculator and I can show you exactly how much profit I made for selling this call. 70 cents times 400 shares is I made $280 on this position just by selling someone else a call. It expires, by the way, the 17th of May. And all that says is that if by 17th of May, the price is above 480, I have to sell that person, whoever bought those calls from me, if they want to exercise their right to sell shares here, or buy shares at this level, I get, exercise, meaning my shares get taken away from me. And by the way, they get taken away from me for a very nice profit. I'm currently up $4,800 between these two positions. Now the call is slightly in the red, but if this market goes sideways or down or slightly up, I will make very nice profits. If it goes really up, I'll make really, really nice profits, but I'll also be taken out of my position. Now, again, I still have shares. So if this market rips, I make profit on my shares and I make profit on the option that I sold. I just get taken out of my position. So essentially, if the market rips higher, I have a take profit order and I got paid to put that take profit order there. It's a very cool little thing. That's why I love options. You essentially get paid to put buy limits and sell limits on your trades. It's kind of awesome. So anyways, let's keep going. I'll take a look at some of my other positions. XLK, this is another very profitable position for me. This is an ETF similar to the NASDAQ, but it's very specifically tracking a lot of technology names that, we all know and love. Talking about Microsoft and Nvidia and, big powerhouse players in the technology world. So I have a position on this one, and I also on Friday sold a call inside of our Discord channel. I'll show you that really quick. So I mentioned I share all of my trades inside of the Discord channel. So I sold calls on Friday. This is what the alert looks like. If you'd like to pause the video and read through this, you're welcome to do that. I ended up selling the calls on this on Friday. So, I ended up pocketing $469 for selling that call. And all that says is that, $215 is the strike price. If the market rips up here, I will make really nice profits on my shares. But at the same time, I will also be required to sell my shares to someone at $215. Not a bad deal. I'll make profit on the move and I'll make profit on the option that I sold. And that's if the market rips like crazy in the next, several weeks. This expires, by the way, the 31st of May. So if the market goes sideways or if it goes down or if it goes slightly up, I will make some profit off of the call option that I sold, which is nice. So there's the second position. Let's keep going. We've got SMH. This one is just an easy one. I sold puts on SMH. The market bounced. So when it was dropping like this, I said, hey, you know what? If it comes down to 195, I'll buy it. And so when I did that, when I sold that put, I collected premium, and I'm currently floating 72% of that max premium that I sold it for. So I'm up 72% on the premium there, which is really nice. I'm up $1,100 on this trade. It's looking very likely that by the 24th of May, this will not get assigned to me. If it does, I would need to buy the shares, which is fine. So I'm happy to be a shareholder, buy the shares. SMH is a semiconductor ETF. This is things like Nvidia, AMD, Qualcomm. They make the computer chips that we're all using right now. So, that's an ETF that I really like for the long term. If I get assigned, great. If I don't, I'll pocket the premium and move on. The gold position is different. That's what I talked about earlier in the video. TAN, this rocketed in the last few days simply because, again, this is solar panel ETF. And a solar ETF, of course, this is companies that specialize in building solar panels and software and technology and hardware in that field. I sold puts, got assigned on TAN. Now I'm in the trade, and I've sold calls at 44. Now, if this market keeps going, these calls will make me sell my shares. Now, I'll sell them for a nice profit. And if this market goes sideways or lower, then I will be out. I actually would love this thing to just rip and go ahead and take me out. I would take my profits on this one. I could use the money somewhere else. I've got, $21,000 in shares right now in this. So I would not mind if I do get called away from my shares. I'll take the profit and I'll move on and find something else to trade. But again, it is an area of the market that I like quite a bit. I just think that what I'd like to do on this, just full transparency, I think I'd like to take the money from this and buy a couple individual solar companies that I really like First Solar. So I'll be looking into that. Those are some game plans for the coming weeks. We'll see if this does take me out. I'd love to see this thing continue to rip higher on falling yields. Really, that's specifically what's causing this. The solar panel technology is very expensive to build. It requires a lot of borrowing cost. So if borrowing costs are going down by falling yields, that'd be great for TAN, which is, again, a basket of ETF or an ETF or a basket of stocks that are specializing in the solar technology world. Okay, let's take a look. TAN, IBIT, and TLT. So TLT came back to life a little bit on me. So I'm still in a floating loss. This is one that I'm struggling with overall, or not struggling with, but dealing with a losing trade right now. I sold puts on this, got assigned, and the market just kept tanking. So what do you do in that situation? Well, TLT is something I wouldn't mind holding in the portfolio. TLT is a diversified basket of treasuries that are long duration treasuries. So these are, US debt essentially, which is, has its own risks, but so do stocks, so does gold, so does silver. Everything has risk. So what I did is I sold puts. I got assigned 1,000 shares. And I then sold calls. The calls are looking really good that I sold. It's unlikely that they, expire in the money. Although I would love for it to expire in the money. If this just rips, if we see, bonds rip on falling yields, then that would be great for several of my positions. As you can tell in my positions recently, I truly bought the dip. I have a lot of interest rate sensitive stuff in my portfolio. And to be honest, I'd actually like to lighten up on some of that. Like TAN, I wouldn't mind if that got taken away from me. I wouldn't mind if TLT gets taken away from me by selling calls and getting assigned, because then I could put stuff in, areas of the market that I like a little bit more that are not so interest rate sensitive. That's where I see a little bit of, where I'd like to pivot a little bit, get a little bit more diversified and less exposed specifically just to things that are interest rate sensitive. Basically right now, if yields drop a lot, my account makes a lot of money. And if yields rise, my account takes a hit. So that's something I'd like to diversify a little bit. And I'm showing you guys this. If you like these in-depth, breakdowns of my trading account, I don't know, hit the thumbs up button. I look at the like button a lot just to see how many people resonate with the video. Remember, if you guys want to trade with this broker or you're looking for one, free money down below in the description. When you sign up with one of those brokers, there's special sign up perks available to you. Thank you very much for making it. If you made it to the very end, make sure you let me know. Comment something down below. I'll try and heart your comment. 45 minutes in, you're a champ for hanging with me. Have a great week ahead. Thank you so much for watching.